Okay, so the financial narratives we've all been sold about the world's top AI labs over the past couple of years, yeah, they are facing a massive reality check right now. Welcome to The Explainer. Today we're unpacking the brutal economic reality of what I call the AI squeeze. Look, we are witnessing a huge shift in the artificial intelligence landscape, and those financial models everyone just assumed were invincible, well, they're starting to crack under some extreme pressure.
So, the trillion-dollar question, literally. Are OpenAI and Anthropic actually worth $1 trillion each? Wall Street is about to find out. To really grasp why this is such a huge deal, we need to look at the raw numbers and the wild expectations driving them. We're talking about the absolute titans of the current tech boom, right? Companies being heralded as the next Microsoft or the next Google. The whole assumption here is that they've built this insurmountable lead. $800 billion. Both of these companies are actively courting investors for IPOs at staggering valuations north of that $800 billion mark. And look, this hype isn't just coming from nowhere. Back in the first quarter of 2024 alone, we saw annualized growth rates hitting 80x. People really believed in this AI revolution, and they poured completely unprecedented amounts of capital into it, fully expecting these frontier labs to hold on to immense, lasting power. But here's the absolutely crucial point. That impenetrable moat these companies are selling to public investors, it's actively shrinking. The original pitch promised decades of premium pricing power, but the reality on the ground looks a whole lot more like a tightening squeeze. They are getting relentlessly attacked from both the bottom of the market on price and from the absolute top of the market on security. Part 1. The open source price war. Let's look at how the bottom is dropping out. Imagine for a second that you're a chief financial officer with a $10 million AI budget. If you run your entire workforce on a top-tier model like Anthropic's Claude Opus, you could easily burn through that massive budget in just a matter of weeks. It's wild. But if you take that exact same volume of tasks and shift it to DeepSeek, which is a Chinese open-source model, that identical budget stretches across almost a full year. That is a total game changer. And the benchmarking data from artificial analysis proves exactly why this shift is happening. Right now, running the top American model costs 9 times more than using the cheapest Chinese alternative to do the exact same work. 9 times. When enterprises move from cute little experimental AI projects to actually rolling it out across an entire global workforce, that 9x cost difference becomes a massive operational bottleneck. And make no mistake, adoption is aggressively following the price tag. Just look at OpenRouter, the largest AI traffic aggregator out there. The shift has been literally seismic. In 2024, Chinese models accounted for roughly 1% of usage. By 2025, that's skyrocketed to over 40%. Actually, right now, 3 of the top 5 most used models on the entire platform hail from China. So, how exactly did they catch up so fast? Well, it boils down to the strategy of constraint. You see, because Chinese labs were cut off from the absolute best NVIDIA hardware due to export restrictions, they couldn't just throw endless brute force computing power at the problem like the American hyperscalers did. They really had no choice but to rely on their researchers to innovate purely on efficiency. They were forced to focus on smaller models, cheaper training methods, and super creative algorithm design to close that capability gap.
Moving on to part 2, the high-trust enterprise gap and the premium squeeze.
Now, to really understand this premium side of the market, we have to talk about security. Specifically, the concept of being air-gapped. This is totally vital to grasp. Highly regulated industries, we're talking major banks, healthcare systems, government, national grid operators, they are never going to use open-source Chinese models. It doesn't matter how cheap or powerful they get. The cyber risks are just way too high. For these entities, absolute trust is everything. They require systems that are completely 100% isolated from outside networks. Which brilliantly illustrates how companies like Cohere are stepping up to capture this premium market. Fun fact, Cohere was founded by Aidan Gomez, one of the guys who co-authored the research paper that basically kicked off the entire modern AI era. They guarantee absolute zero cyber risk by deploying in some seriously extreme ways. They operate fully on-premise, deep inside customer data centers. Gomez even mentioned they can deploy a model entirely air-gapped on a submarine a kilometer underwater. I mean, completely disconnected from the internet. Talk about secure. But here's the catch. Achieving that intense level of security introduces a massive physical constraint. To deploy AI in a submarine or inside a highly secure bank vault, you obviously can't use an enormous 10 trillion parameter model that requires a warehouse full of humming servers. You need specialized, highly efficient models. So while hyperscalers are gearing up to drop roughly $700 billion on vast infrastructure this year alone, Cohere is out here custom building models designed to run flawlessly on just 2 to 4 GPUs. Putting this all together, it becomes abundantly clear that OpenAI and Anthropic don't just have a China problem on the low end, they have an America problem right in their own backyard. This highly trusted US ecosystem is building specifically for this enterprise gap. Cohere's revenue grew 6x last year just by focusing on high security. NVIDIA, already the most trusted infrastructure provider, is releasing its own open source models that are being rapidly adopted by enterprise software giants. And you have startups like Reflection AI raising billions to build open source frontier alternatives. They are all squeezing the middle. Part 3. The standalone AI problem and the massive cash burn. $1 billion a month. Let that sink in. That was the reported cash burn rate of Elon Musk's XAI before they went through a major structural change. It really proves that building massive frontier models without a focused, immediate enterprise return is unsustainably expensive, even for the absolute deepest pockets in the tech industry. Just look at how fast the strategy had to pivot here. XAI was burning immense capital trying to compete at the very frontier of AI. So, to solve this, Musk strategically merged XAI into his rocket company, SpaceX. Why? Because SpaceX generates massive, reliable annual revenue that can safely backstop those astronomical AI research costs. Think about it. If the man who built the largest AI supercomputer in history realized his standalone lab needed a massive corporate safety net, you better believe Wall Street is going to intensely scrutinize the standalone, undiversified economics of companies like OpenAI and Anthropic. Part 4, the future of AI, looking beyond just the markets.
Because beyond the financial mystery of who's actually going to win these enterprise wars, there is a very human reality unfolding right now. The relentless shift toward AI is drawing some intense and honestly valid criticism. There is a very real strain being placed on our global energy grids just to power all these data centers. And at the exact same time, we're seeing major pushback from creative industries over rights, not to mention general public exhaustion with all the low-quality, automated AI slop that's just flooding the internet. Which brings us to a really vital reminder from one of the technology's founding architects. Aidan Gomez explicitly pointed out that the AI industry must respond to this valid public backlash with actual mitigation and real infrastructure investment, not just dismissive hype. If AI is truly going to integrate into every single part of the economy, it simply can't just steamroll over consumers, artists, and our power grids. So the giants of today are fighting a brutal two-front war against nimble open source efficiency on one side and hyper-secure enterprise specialists on the other. If the impenetrable AI moat is cracking from below on price and from above on trust, who actually owns the economic future of AI? It's a $1 trillion question and one we should all be tracking very closely.